First of all, let's talk about what is a straddle. This is only a few short slides. I'm only mentioning it because I want people to understand what a straddle is before we go look at a little bit of back testing. I'm only going to back test straddles from the standpoint of really showing you how to use on demand more so than I am teaching about straddles, because straddles is a buying strategy and we don't generally do buying stuff. We use them at opportune times because we all about some opportune times. But I'm more concerned about making sure you understand how to use the on-demand feature than I am and how that you understand how to work straddles. Make sense? A straddle is when you buy a call and a put at the same strike price. You're buying a call and a put at the same strike price. You're buying. It's a buying strategy. It's used during high volatility times like earnings or big news or FOMC announcements. That seems to be anytime Jerome is going to speak, seems like we need a straddle, right? Since you really don't know which way the price will move, the thought is that the winning side will overtake the losing side and thereby put you in profit. So for a straddle, you may spend $100. You may spend $400. It all depends on which stock you're using. And your anticipation is that whichever way it moves enough in that direction to cancel off your losing side, but to overtake it with more profits on the winning side. Now, where this can be a drawback for a straddle is if price doesn't move enough to put you in profit, right? So if you paid for a straddle at the 100 at 100 and price only moves up to 102 and moves down to 98 and stays in a window. If it doesn't move hard in one direction, your money's just going to dissipate. Theta's going to eat up your money. And Theta is not your friend when you're a buyer. Theta is not your friend when you're a buyer. When this happens, you could lose the money that you spent on both of your contracts.
Arlissa, is this call recorded? Sorry.
Yes, ma'am.
Yeah,
it is. Yep, it's recorded. All righty. You need price to move good in one direction when you're doing a straddle. Price needs to move really good and steady in one direction when you're using a straddle. So let's look at how do we get to on demand. I think I have one more screen for on demand. Let me go back to that first, and then we'll go back to opening it up. When you're using on demand, you're going to open your live account. You cannot use on demand in the sim or in your paper trading. Now, on demand is a feature that's available within Thinkorswim, and I think almost everybody here has Thinkorswim. If you have TradingView, they do have a replay feature in TradingView, but that doesn't allow you to enter any trades. It just lets you see what the stock did, right? On demand in Thinkorswim allows you to enter trades in that simulated space, and you can see what the trade actually did. So you want to open your live account, look for on demand in the upper right corner. We're going to do this. Select the date you want to see, and then input the time of the day, right? Then you're going to select the single play arrow, which will play at regular time. The seconds go as per second. Or you can do the double play, the 2 play arrows, and that shows 3-second jumps. So time moves a little bit faster. Questions about finding on demand? Okay, let's look at some. I believe I got myself logged in. Yep, I do. Okay, we are in the live account. Let me get my pen. On demand, it's up here in this top right corner. Everybody see it? Was there a question there? You are your own CEO. You are the CEO of your own portfolio. Okay, we click on demand. See how the screen here turned into this orangish color up here? Lets you know that you are now in a simulated or you're in the on-demand environment. Notice when it was off, it was all white, right? This is a regular trading environment, but when you click on demand, it turns to this peachy color, letting you know that you're not in your live environment. You are not trading for real though. Okay. So here you see the dates. You can pick here. Let me get my pen back. Is that mine? Oh, sorry. Okay, so you've got here, this is the date I was telling you, that's the place where you're going to pick, right? When you're going to go get your date. Next to it, this back arrow here takes you back 10 minutes. Okay, so if you just want to go back in time 10 minutes, this double back arrow with the line will jump you back 10 minutes. If you want to move forward 10 minutes, this forward arrow with the line will move you forward 10 minutes. Basically what it says is this whole environment we're looking at is February the 1st at 3:08 in the afternoon. You see, it's in military time. Right? So back, this to the left moves you back 10 minutes. This to the right moves you forward 10 minutes. Of course, this is the pause button. Right now we are on the regular play, so it's running at regular time, or you can do this double play option here. This means it's moving, the time will be moving forward in 3-second intervals. Okay, reset next to that, reset is going to reset the money and the positions. So if you click reset here, okay, come on, I hit it twice. You click reset, it says, do you want to reset the time? Do you want to reset the account? A lot of times I'll do like I'll practice something for a week and then I reset the account. So, or a day or a trade, but you can just basically reset. It resets the account. It takes all the trades out. It takes all the money out. It just puts it back at regular, back at plain Jane. Okay, so when you click on the date here, when you click on this date, it brings you the calendar up. February 2023, it says, which date do you want to pick? You can pick, you can change and go forward in the month. Now it's March, April. Of course, you're not going to, this is all grayed out in April because April hadn't even happened yet. Yesterday was the 17th. The on-demand runs at least 2 days behind you. So Saturday is where we are today. You cannot look at yesterday yet. You can look at Thursday though. Anything that is black, you can select. Anything that is grayed out, you cannot. Okay, go back to February. You see the whole month of February. February 20th is in red. That was a holiday. There's nothing there. You can't, you can look at it, but there's nothing happening. Okay, do we have any questions so far? I'm picking February the 6th, which I actually could pick March. Let's do March the 6th. March the 6th, and I'm going to change, we could change the time here. So you want, when the market opens, you do 09, 30, it gives you even down to the seconds. Okay, this is 09:30 on March the 6th. Now, like if you live in Central Standard Time, like Jamie does, if Jamie wants to see 9:30 our time, he needs to put in the time. What time is it where he is? Because this whole thing is set up on your time clock. So if you are, when I was in Bahrain, I had to put in stuff like 14 and 15 because that's what time the market was opening. But wherever it is where your time is, this is what time you need to put here. All right, so it's based on your time, not based on East Coast time. Once it's running, which it is right now, I can see the option chain up here in the top left. I don't know if you can see up here where it says pre-buffering. It lets you know that it is filling in the data. There it goes. Now on demand is ready and running. Sometimes you'll pick something and it has to go populate it. So we can pick the chart. You can basically pick all the stuff that you would pick if it was regular time. You can pick the chart. It is going to basically replay for you what the chart was doing on that particular day. I'm picking SDS because Sandra, do you want to look at SDS or S triple Q?
SDS.
Okay. Good morning, by the way.
Good morning.
Morning. So, it's taking a bit of a minute to populate. Come on now. You can see the chart. You can see the option chain. It's basically saying, okay, we went back in time on SDS. We are on March. It's almost like we are at March the 6th in time travel. We travel back. March the 6th at 9:30 in the morning. This is what the option chain looked like that morning for a regular single chart. If we wanted to look at, and so when you're looking at straddles, it's the same stuff we would have on our regular option chain, single, vertical, all the back ratio, calendar diagonal. But if you're looking at a straddle, you pick straddle here. And current price is $41.32. You could pick, most people pick at the money for a straddle, up to you. And if you change, if you have, that's gonna go a little deeper, but if you pick two different strikes, that's called a strangle. That's not a straddle. Straddle is when you pick the exact same prices. If you decide you want to pick a little bit down, a little bit up, away from each other, that's called a strangle. Different, little bit of a different trade. They're similar, but they're different. Let me see. So we got, if we were looking for a straddle, we want to buy a straddle. Right, so what column are we looking at when we're buyers? My newbies are on here. Which column do we look at when we're buying? When we're buying, which column do we look at? See anybody put it in the chat? Open up your mic, something.
X.
The ask.
Ask column, yes, as a buyer. Ask. Yeah. So let's say we're going to go with current price 41. Notice that on this side, the call side and the put side, it's exactly the same. So you can't get it wrong on the straddle. If you want to buy a straddle, you're going to pick $1.85. $1.85. So now the question that Sandra had asked, and it's a little early in the day to buy a straddle based on what we were talking about, Sandra, we want to buy it. Did you want to do later in the day? Like what time you think you'd want to do?
Maybe an hour and a half before the market closed.
Okay. All righty. So let's move ourselves forward in time to now we're talking about maybe 2:30. Got to do 14:33. And then you push go and it takes you to where you're going. Hopefully, even though it doesn't seem to want to populate that chart. But okay, wait, did we get 14:33? No, we did not. Nothing changed. You got to make sure you pick go. Then it starts to pre-buffer in the top, basically let you know it's trying to populate where you want to go. Now it's on demand is here, so it's ready. Current price is still in the $41 range. SDS hadn't moved a whole lot today. I wish we could look at that chart. We'll get it again here in a minute. Notice the price here is a little bit cheaper for the SDS straddle. You got 155. You can pick either side of this. You're basically going to pay $155 for a straddle on SDS with Friday's expiration. Basically, you're saying you believe it's going to move more enough in one direction or the other for you to grab you some profits. Okay, I'm going to select it. Since this is a buying strategy, this is all green. It's debiting, so you're basically going to pay to enter. One contract at 41 and call and 41 put, 143, and we're going to confirm. Oh, I meant to do Let me see. I meant to show you what it looked like when it what the next screen looks like. Okay, so confirm and send. I want you to see here this screen. And it says, it gives you your break-even strike prices. It says if the price goes below 39.55 or at 39.55 at 42.45, you will be breaking even. So it needs to go above 42.45, price does, or below 39.55 in order for you to be to be in profit. So between 39.55 and 42.45, you're not making any money. That's why I was telling you, if price doesn't move enough, it'll start eating up your money. So between 39, if price stays between 39.55 and 42.45, you aren't making any money there. Your money is dissipating. Okay, you need price to go outside of this range in order for you to be making money. Your profit is infinite, because if the price goes, hard, forever one way or forever the other way, then it'll continue to grow. Your max loss is only the 145, because that's all you paid. You can only, when you're a buyer, you can only lose what you paid. The cost of the trade is also 145. That is what you paid. Your buying power is affected, $145 in parentheses, which means you're going to take away $145. And then this is all the buying power just because you're in on demand. That's not my real money yet. It's an on-demand money. Okay. Questions? So I entered that to see, we did 145. I really wonder why the chart is not populating properly. Maybe it's taking a little time to populate. But the thought is that you enter this, the straddle, Sandra's thoughts were, could we enter straddles at the end of a trading day with the thought of getting out the next day after the price has done either the gap up or gap down? That tends to happen in the morning. So SDS is the short it's the SPY short, or the S&P 500 ultra short. It's the short of the SPY, the super short of the SPX. Notice the prices are $41. SPX is $4,000. SPY is $400. SDS is $40. Right? That makes sense? SPX is $4,100 is the current price, or somewhere at this time, and SPY is $410. SDS is $41. It's the ultra short. Sandra talked about using this on SDS or on SQQQ. Same thing. SQQQ is the ultra short of the triple Q. Is the short of triple Q, sorry. And the super short of the NASDAQ. I really don't know why this is not populating the chart, but let's keep it pushing. We don't let stuff like that stop us. Okay, so let's go forward to the next day. We're in the trade. We paid $145 for it. Oh, let's go look at monitor. If you want to see your trade, you go under the monitor tab. If you want to see what your trade is actually doing, go under the monitor tab. Okay, looks like we are still kind of, let's jump us forward a little bit. Looks like we're still at the break-even point. So we're still on March 6th. Price is moving along, but nothing's happening here. It should be changing a little bit. Let me move us forward 10 minutes and see if things look any different. Does anybody else have on-demand issues that are on-demand that is tripping? Or we got money now? We're losing money a little bit, $2. We're $2 down.
Arlissa.
Sir?
Don't forget that Saturdays is when they do a lot of their stuff on their end too.
I know. They do, right?
So some of that might not have anything to do with your machine.
Right. Notice you said might not.
I mean, you know, I don't know for sure, but you know.
Oh my goodness. Okay, so this is the trade. This is what we paid for the trade. Okay, this is what we paid here in this column. This is what we paid. Mark is basically what it is currently. What is currently, which is about the same spot at this point, but that's what the mark is. And your P&L open is going to tell you basically, are you in the money or no? Are you in the money or not? And this may not, well, if you do it about 2:30, you're going to have an opportunity to maybe capture the power hour move, right? Because power hour is where price does generally tend to move in one direction. I won't say it's constant, but it will look like it's moving one way versus the other. So maybe we get into power hour and that happens pre-buffer. Let's see, I got some questions, some más preguntas, or somebody's answering them. Wonderful. S triple Q, super short of the NASDAQ. S triple Q is a short of triple Q. Super short of the NASDAQ. S triple Q straddles cost more than SDS, but the price may or may not move more too. This is, come on. Okay. Don't know what is going on here. Let's see if we're going to 44. I'm moving us forward in time and seeing what's happening later in the trading day. This should be doing something different. The price is not sitting still. Oh, there we go. We're still down about $2.50 right now. One leg is in the positive. This is what you see over here. One leg is positive, okay, and one leg is negative. Here we go. The call leg is $250 in the positive, and the call leg and the put leg, I'm so used to doing verticals. The put leg is down $5. That parentheses means it's down. This is like negative $5, right? So the difference between those two is a negative 250. It's a negative 250. So your expectation is that one of these gets to be bigger than the other or overtakes the other enough to put you in profit. Okay, let me see if we can, now I'm gonna jump us forward to tomorrow morning. We were on the 6th, right? Let's move to the 7th, and I'm gonna take us to 9:35. See, right after the market has opened. So I moved us forward. I used the calendar up here to move the time to March the 7th at 9:35 in the morning. Up here in the right, left target telling you that it's pre-buffering. It's filling in its thing. At this point, this is now what our trade looks like. First thing in the morning, we paid 145. We look here to see what is it worth. This is the mark. You add these two together, we got what, 139? If we add those together, this shows we're at a $5, a minus $5 for right now. The call leg is still positive. The sell leg is more negative, which means price is going up. We still haven't gotten ourselves into profit just yet. Now, this is one, when I back tested it and just kind of random, it took a couple days for it to do whatever it was going to do. Sandra, have you seen it do it in one day, or what have you seen happen?
If I get in late on an afternoon and the next day it gaps, let's say 30, 40 points, as opposed to 10 or 15, 20 points, then it moves. And normally I gives it a minute, but it's a weekly expiration.
Yeah.
So you have time for it to do whatever it's going to do. So it may not
That's
happen
true.
that next day, but eventually throughout the week it should move.
Yeah, that's what I noticed too. When I did the back testing before, after a day or a couple of days, you saw there was enough movement. Definitely by day 3, it had done something. I moved us forward 10 more minutes. You see the time here. Well, let's move forward in time and see what we come up with. I'm going to take us to now. What you can't see, because I can't see that chart, is if there's some pops. If you're trading this, you would be watching it a little bit closer to see when there's a good placement. You put some alerts on, let you know when it got outside of that 39.55 or the 42.45. If it goes, if you knew, oh, look at there, we got $50, we up. So I'm going to pause this. I can't see the chart, but according to this now, this was 2 days. So we started on the 6th, we started on Monday, and this is Tuesday at 2 o'clock in the afternoon. Price has moved enough for us to be in profit, right? You can tell here that the price of the call has gone up to $87, gone up $87 in profit. So it went from, we paid $90 for that trade, and now it's worth $177. That's where you get this $87 at here. So the call is up $87. The put, we paid $55 for it. Now it's worth $15. The difference between these two is the -40. So the $87.50 minus the $40, now you have a profit of $47.50. So you paid $145. And now you're going to walk away with $47.50. It's now worth $192.50. Okay, I'm going to show you where I got those numbers from. We paid $145. You add these together, we paid $145. Now you add these together, it is worth $192.50. Now you got more, it's worth more than what you paid for it. Okay, so if you're ready, Sandra, where do you have a closed target per se? Looks like it's up. Oh, you can see what your profit is up here. And your profit and loss, you're up 32%. On this trade, you are up 32%.
Close out.
You ready to close it out? Okay.
Yes, ma'am.
So if we're going to close it,
question.
Jamie. Yep.
Where did you get 192.50?
Okay, I added. I added 1.775, 177.50 because I multiplied by 100. I added that to $15.
Got it. Sorry. Thank you.
No, do not apologize, because you're not the only person who got that question, I'm sure. I added these together and got 145. I added those together and got 192.50. So I paid this, paid 145, and now it is worth 192.50.
Got you. The sound was going in and out, so I wasn't sure what I heard, but all right.
Sorry about that.
No, that's me. Thanks.
Yep. Okay, so now we're ready to close it. In order to close it, you select both of these legs.
Thank you for that question. I wanted to ask the same one.
Yeah. That's right. Yes, ask. That's what we do here. This is a learning environment. You select both of these legs. I picked one, and then I held down the control button and pushed the other one. That's how they both became blue. Create the closing order. It tells you here, you want to sell the straddle. Let me go and get rid of this stuff so you all can make sure nobody's getting impeded in their view. Both of these, right click gives you create a closing order, sell your straddle for 192. Sell your straddle at 192 right here. Okay, I'm clicking it. Now it's red because we're selling. We're selling it back. We bought to open. Now we're selling to close. 192 credit is what we should take in. Confirm and send. It basically tells you all the good stuff. You're closing out your trade. Send it. We collected our monies. Okay. Preguntas?
I have a
Sandra, do
question.
you do them multiple days, or you just do one, or do you do multiple days?
I've been doing it in my sim, but the question I have is, in a live account, if you get in one day and get out the next day, and you try to re-enter the same day you got out, that's going to count as a day trade?
I
Will
do
that count
not
as
believe so, because it's if you open and close a trade the same day. So if you were closing previously opened, I don't think it. I'm like 98% sure it does not count as a day trade. I also think you're also picking, you're probably going to be picking another strike price, and that may matter. I'm not sure about that part. I'm iffy on that part. But that is a good question for support people. I think it's when you open and close, you've opened and closed it. But if you closed the trade from the previous day, which was previously opened, that closes off that loop. You understand what I'm saying? You opened it Monday, closed it Tuesday. That closes the loop on that trade. And that when you open again on Tuesday, that's starting a new loop. But I think that's worth clarifying, though. I'm about 98% sure I'm correct, but that's a nit, and I think it would be good if we knew that for sure.
All right, thank you.
Mm-hmm. So if you were going to look, we're at 2:00 in the daytime, and you were going to look to do it again. You're in the same window of time that you would potentially look for another day. Current price now is at 42.62, so I probably would go with 42.5 or something like that, 43, somewhere in this general vicinity. If you wanted to enter another one, you would click on the ask. Are we in Straddles? Yep. And you're going to, nope, I'm in Straddles. Give me what I want. Okay. Basically, you're buying at 42.5 is our strike price. How much it's going to cost you, that's also your max loss. You've got your break evens between 41.07 and 43.93 is where you need to be outside of those zones to start making money. We paid $1.43 this time. Who has questions?
Arlissa, I have a question.
Uh-huh.
So this is for a week, right? This is weeklies?
It's set on, we're choosing this coming Friday as the expiration, yeah?
Okay, but normally after 2 or 3 days is when we should see if there's enough change. That's when we would close out.
It may even be 2 days, because the one we just did, we entered on Monday and we were able to close it the next day. We entered on the 6th and we were closing it on the 7th.
Okay, so as soon as we see that it's gone out and we've got some profit.
You got the profit you want. Yep.
Should we let 30%, or what do you think?
I like 30%. I think 30% is a very safe place to grab profits. If you go too much further, you can be feeling, of course your brain and your body is going to want you to go, we can go higher, but 30%.
Yeah, I know. I think it should be set it to, I think that's the question. Like, I could make a little bit more.
Yeah,
Are you
I
talking
think
about
30% is good.
You talking about 30% for all trades or just certain ones?
No, for buying, when you're buying.
For buying, got you.
Yeah.
Okay. Okay.
Oh yeah, no. When we're selling, we go for 70.
I'm about to say I'm up in that 70, so I'm about to get
no.
to something.
Yeah,
Okay.
No. When we're selling, we're looking for 70%, which is the 30% loss. Yeah. So 30% gain on your bought trades is I think is a good sweet spot, but everybody has to do what's good for their own selves.
You got your money back plus bounce.
So what we have here, I just reopened another trade, and the zeros show you the ones that's already gone. It's already been, these zeros tell you that trade is closed, and the ones with the +1 here, those are the ones that are open trades. Those are open trades, 42.5 call and put. We paid $143 for them, and it's currently worth $135. I added these together. It's currently worth $135. So we're down $8. It shows here our profit and loss up here. We're in the negative $8. It also shows it down here but that covers like everything you got in your lineup. If you only have one trade, it's easy to see. But if you need to see just what's happening with SDS, then you want to stay on the line with SDS to see these things. Saida?
Hello, I have a question. So you're going for a Friday expiration, but you would open these the day before you think FOMC is going to speak?
You could. Now, Sandra's thought is that SDS, because SDS is moving, SPX moves a lot up and down. Honestly, you could probably do straddles on SPX each day. That would be very expensive, but it probably would work for you with the weekly expiration. So, okay, take back what I just said, because I'll have to go down a whole nother hole. You probably could do straddles on SPX on a weekly basis and have some good results too, but that would be costly, because you have to buy a call and a put. So let's go down. SDS is more cost effective. We're talking about $143 to do it for the week. So I think you could enter it the day before to answer your question, day before going into an FOMC meeting, you could do that. But Sandra's suggestion or thought is that you honestly could do it one day because SDS closes every week, that you could do it with the Friday expiration, and because price moves up and down enough in that index, you're going to be able to see some regular profits.
Oh, okay. Thank you.
Yeah. That's the thing. I think what will be good about doing something. Remember, when we do straddles, we've always said we paid something for it and we set a profit target. We've always done that when we've done straddles. We set a profit target on the front side, so that way you can open it and put in your stops. You're going up, going down, and if you get stopped out, you're fine with that. And if when it gets to where it's going to be, it closes off. That way you're not necessarily watching it either. If you have a stop loss in place and the take profit in place, then it just closes on its own. I moved us forward 10 minutes. We're only down $3 right now, coming to the end of the trading day. See if I can get us a 8 right here, 358. Y'all know them last 5 minutes. Our SDS may not do it, but if we know SPX will, it'll just be gone, baby. Okay, so we're down $3. Let's move ourselves forward to tomorrow, March the 8th. And I'm gonna take us to 10 o'clock in the morning. Is that a 0? I think I lost my holding. Really, I want you to have a good understanding of, I didn't mean to pause it, of good understanding of using on demand. And you can use on demand for any strategy you want to back test. And, I used to, and I still do a lot of times, we'll spend the weekends just rerunning and rerunning back tests, and you can move forward and you can make the time go much faster. Doing it in your sim is great too, because the market is open and live, which is good. But when you're doing it on demand, you can use a time when the market is closed and still get the benefit of that. Okay, looks like we're at 10:10 the next day. We're down about $10. Let's move us forward. I'm going to move us forward to maybe 1 o'clock in the afternoon. See what it's doing. Good thing about buying, you can set your profit and your loss. You can set your stop losses and your profit target. You can set that ahead of time. If you decide, what is the max that you want this trade to pull back to. If you spend $140 and you say, I'm willing to lose, 10 or 15%, then you set a stop loss at that. If you're taking 30% in, you might want to say, I'm only willing to have it pull back 10%. That's a 3-to-1 ratio. If that's, where you are with that, you can say, well, I don't want to pull back any more than that before it shuts off the trade, and, you move on to the next, or you re-enter, whatever you want to do. And then you set your profit target, set your loss, and have it just sit there and do its thing. Looks like we're down $15 at this point. Let's go a little bit forward. I took us forward to 2, taking us to 3 o'clock on this day. On the 7th, or are we on how we get to the 8th? Oh yeah, we opened on the 7th and we're looking at the 8th. Pre-buffering. We're down $18 at this point. Let me change my numbers here. Erase this. Not where we are. So you can tell here on the P&L, we're down 12%. Here, the trade is now down 12%, and we're at 125 is where you are currently in price. Let's see what the end of this day looks like. I think there's a big move that you have, like when the market opens, gaps up or gaps down in the morning, or it runs hard in one direction for the day. We've seen it do that. We've seen it do that too. Okay, at this point, our trade is down $23. We're down 16%. Okay, $23. Let's see what the morning holds. Now, the person who decides when you exit this trade is who? You, baby. You, baby. It is you, baby. Yes, the person who decides when you're going to enter and exit this trade is you, baby. I'm on to Thursday now. So we started on the 7th, which was Tuesday, to the morning. Huh?
For the record, I am over here cracking up. You sold it. Like, you really sold it with that.
I sold it.
Okay, man. I am over here like, I'm glad I got to put this on you, because Lord, I'm over here cracking up, because you're telling the truth on that one.
It is. It's just the way it is. And then, we definitely want the best, but sometimes we have to decide what is the P&L loss that we're okay with, but you have to decide that on the front side. This is my point. We must decide these things on the front side. So that way you're not in the midst of the emotions and in the midst of the moment, like, should I, use your charting, use the things that we know how to do, and then decide, is this as far as I want to go with this or not? Whatever your amount is, put your trading plan together and do it. Now, trading plans, we're talking about this before, trading plans are different for different strategies. If you're going to do a buying strategy, you really should have a plan as to what's your stop loss and what's your take profit, which are going to be different than if you were doing verticals or you were doing covered calls. Those are going to be different ones. Yes, ma'am. It's coming up. Go ahead.
With the straddles, I always assume that you would close the losing side and then let the winning side run. No?
That was when you're doing verticals.
Oh.
Mm-hmm. If you're doing straddles, you actually want the two. Well, because what you could do if you close, let's say you closed this $33 side and took a $33 loss, and then the other side didn't do anything, then you lost on both sides. The whole point is that you are in both of these because you didn't necessarily know which way it would go, and you want to benefit from it going either way. Now, what you can do is say, okay, it's gone up. The call has gone up nicely and it has hit a sell zone, and you can close that side because it's already, you know, it's not going to go up any further, and then let the put thing keep going. But remember, your put, you took in your put at 42.5. So let's say 42.5 is your 42.5 strike is where you took in, but you said goes up here to a sell zone, and then you close the call, but your put started here. It didn't, your put's not starting up here and coming down. It started at the 42.5. So it's got to now, your put has to now cover all this territory and go down to more. Because what did we say? It was $40 and something was your break even. It's got to get all the way past here in order for that to be in profit. So what you should do is, if it's gone up and the call, if it's hit the sell zone and you're not in profit yet and it's not going up any further, you just may want to close off the trade just because you're anticipating that it's going to come back down. Unless you're anticipating it's coming down hard, then you could maybe get your money that way. Okay.
Okay.
So at this point, we are $28. That makes sense, Eminata?
Yeah. Yeah, it does.
Okay. Let's move ourselves forward to like 2 o'clock. See what happened on this day in the 2 o'clock range. Now we're getting into, we want to keep in mind that when you're buying, when you start getting into the day before expiration or whatever, then you're now starting to fight with theta. So you're not just working with price action, you're also working with theta. But we're only down 50 cents right now. We're only down 50 cents. Our trade is $3. It's at right there. We're doing good at this point. Let's move us forward 10 minutes. We might, at least you got some of your money back, even if you got to close it now. You're not closing it for the $20-something loss that we would have had. We left it. It's on demand. It's still there. Down $10 again. Let's see. What does the 3 o'clock window hold? I think if you're going to use straddles, you definitely are going to want to make sure that you have your profit and your stop losses put in place, which is what you should do on any of them, honestly, not just, oh, look at that, we got money. We had to wait on it, but we got money. March the 9th at 3 in the afternoon, prices started to go on and go, and look at there, we got money. We got $47 now. Okay, so let me show you what is this trade now worth? How do we know? How do you getting that $47? Well, we paid $143, right? We add these together. We now have our trade is now worth $190. So the difference between these two is the $47 of profit. This one we entered on Tuesday, and it's ready to exit on Thursday. We entered on Tuesday, it's ready to exit on Thursday. One of the hardest things is going to be for us sellers is to give it the time. When you're buying, you got to give it a little more time. And we don't, time keeps on slipping. Yeah, we don't want to wait. I know I don't. I be ready to close up shop. I'm a seller. Time theta is my friend.
Arlissa. Hello, Arlissa.
Okay, we're ready to close.
Arlissa?
Yes,
Somebody's trying to ask a question.
Yeah.
Arlissa. Yeah, this is Sandra again.
Uh-huh.
Could you let that trade run to Friday morning to see what the gap would do?
Okay, let's see. Let's see. Okay, we're gonna let this one go. And this is where, honestly, you would look at your charts. My chart is not something, but you wouldn't just do this blindly. You would be looking at charts to see what is price actually doing, would help inform your decision making. Okay, you want us to jump forward to Friday morning, Sandra? On this one?
Yes, ma'am.
Okay,
Yes, ma'am.
so let's go to the 10th. And what do you think about time? Maybe 10 o'clock, or you want to do earlier? Maybe 9:40?
Yeah, 9:40. Yes, that's
good. Let's do that.
So, Arlissa, on this particular screen, I'm noticing that under subtotals, the numbers that you wrote in, it doesn't appear automatically. Is there a setting for that? For the trade price and the mark? There's no subtotal. Yeah, where you wrote it in, it doesn't automatically add that up.
No, it doesn't automatically total those. What you do have is this over here. You have these two over here. And the difference between the positive 137 and the negative 57.50 is that 79.50. That's your money.
Oh.
Okay.
Gotcha.
So it takes you all the way across. The subtotals are over to the right.
Okay. So where shouldn't it be showing your $47 profit right now somewhere? Or no?
No, we move forward to another time. We move forward to another time.
Okay,
so now it's showing a different
Thank you.
amount of monies. Okay. So as Sandra was saying, we now have more money. Looks like 79.50. This is I think I got it. No, it's not pause anymore. 222. Look at there, $92 is the difference. Actually, not even 222 anymore. $92. So we paid, I'm going to pause it right here just so we can do the math without it moving. We paid $143, 200, come on. Now it's worth $235. Yeah. It's worth $235, which our money over here is our $92. $235 minus 143 equals $92, which is right here. Questions? Now, the hardest part, now listen, if we had jumped out of this trade when it pulled back we were down $30, we'd have been out of it. But now that we waited, it's $92 profit. Now, not always going to happen that way because it can go down, of course, and keep going down. I'm going down. And then your trade's, not doing its thing. Okay. Sandra, you ready for us to close or you want us to wait a little longer?
No, ma'am, close.
Like, no, let's do this. Let's do this like Brutus. Okay, so select one line, control, select the other line, right click, create closing order, sell your straddle, 235 limit, how much we selling it for. Let me clear the screen so everybody can see. Nobody's going to be impeded views. Selling it for 235. We entered on Tuesday. We're selling it on Friday morning. Okay, we entered and sent. Let me make sure this is not on pause because it won't pick up a sale on pause. Okay, you can monitor what it's doing on whether it's working your closing of your trade. You want it to close, and it's right now saying it's worth 232. You wanted to close it for 235. I am notorious for saying, you don't want to do right, we'll move it. 232. Confirm and send. Give me my money. Give me my money. Okay. Who's got questions? Anybody? Sandra, tell us how.
I have a question.
Go ahead.
Because I don't use Thinkorswim. So can you do it separately?
Yes. Let's see, if we were looking at trade and we were on a single, that's a very good question. A lot of people don't. If you were looking at single, right? Single, and you were looking at current price, if I was doing it now, maybe 44, 45, you want to buy you're still using ask, maybe you using 45, you're going to buy, let me use my pen so you can see what I'm picking before I actually select it. You're on your current price here. If you decide you want to buy a call and buy a put, these two together are going to cost you $115. You're buying each of them at whatever strike price you choose. You have got to buy them separate. Cool? Then they should show up in your monitor tab, however your monitor tab looks, and you should be able to close them together or separately. I mean, if you close them, within minutes of each other, you're still doing the same thing. Let's see why our trade, it's worth more money. Y'all see that? It didn't close and we got more money. Two. Give us all of our monies. Go ahead and close so we can have our money. Sandra, tell us what kind of experience you've had in your sim with it. How has your success rate? Talk to us a little bit about how it's gone.
It's been going well. I've entered on one day and got out on the next day. And I've entered on another day and had to wait a day or two just to see if it profited. The thought was to make sure that it had enough price action. And my next question to you is that sometimes when we do the pre-market and we could tell which direction possibly the market is going to open, are we able to put in a close order before the market opens on the straddle?
Yep.
In order to keep, if you have the profit and you see it's going to go against you, put in the close order and it'll pick it up right before when the market opens. That way you don't lose your profit. Right.
Yes, you can. You can put the orders in before market. Yeah, you can put the orders in before market. And that's why we talked about how sometimes those first 5 minutes, all those orders are coming in that it's filling. That's why we wait to see what happens. So you can do that. You can set up a close order before market and set it for the day, and then it'll close whenever it hits that price. I mean, of course, it won't close till the market opens, but you can set the order ahead of time. Yeah.
Okay. Yeah, I think I'm gonna give it another week or two of concentration on it, and before I go live.
Okay.
and then I'll see how that works out live.
Okay. Cool. Anybody else got questions for Sandra or for in general, or how to use on demand?
I think this probably be easier on the central nervous system, Arlissa.
Potentially. You know, if it starts drawing down $20 and $30 and you paid $150 and this group draws down a bit, you're gonna be nervous about that too. People get nervous when their money's going in the wrong direction.
So
But that's where we can
ideally,
put our stop though.
Yeah, this is true.
when do you get in? That's the thing. And
Sandra is suggesting getting in at like 2:30 in the afternoon because you want to capture the power hour movement and then capture the morning, the first thing in the morning movement. So you do maybe 2:30, capture that afternoon, and then capture the morning move, the volatility of the open.
so is it earlier in the week or just any day?
I think it's any
Like
day.
if you're looking at Friday,
yeah.
I thought maybe earlier in the week, but maybe not. I don't know.
Potentially. Well, what we just did this week, that was only 1 week, of course. We got in on Monday and we were able to get out on Tuesday because the price action is what's going to make the difference. We got in on Monday, got out on Tuesday. Then we opened on Tuesday afternoon and we got out on Friday morning. So it probably depends on how the price moves for the week. Let's see, if we were to look at an SP, this thing with the SPX though is would be so costly. But let's look, if I pick up the trade on SPX and we were looking at a straddle on SPX, let's say we were looking on the, take us back to the 6th. And so we were looking at the 6th and we were looking, current price is 38.79. So let's say you pick 38.80. Did you see them prices, man?
Do you have to change that to single?
I put it on straddle because you want to pay for a straddle.
I thought the straddle was calls and puts.
It is. Yeah, but when you pick a straddle price, pick current price, basically, it's buying you a call and a put. So I'm gonna see when I select this.
Oh, I see.
Yeah.
Okay.
It's buying a call and buying a put. $18,000 this trade cost for SPX. Have mercy.
And that's why I chose SDS.
That's why we're looking at SDS. So let's say we were looking at SPY. I took us down.
Yeah, that's what I was just gonna say. How about SPY?
Yeah, let's look at SPY. And so if we were looking on Monday, but see now SPY, you've got multiple expirations. So now you got to ask yourself, which expiration do you want? Do you want to do open Monday for Friday? Current price is 405. So you're going to want to be right in here. Still, we're talking about $700. $737 a straddle would cost you it did cost you on March the 6th with a March the 10th expiration. $700. So now we looked at, Sandra had us we looked at SDS. Let's do a quick look at SQQQ. Current price, we're on the 6th and we're looking at current price is $36. So if we're looking at the $36, strike is $266 is the cost, $264.65. So the SDS was costing $140, $150. The SQQQ cost $260. It costs you a little bit more. I don't watch either one of them enough to know. I don't watch the QQQ, enough to know how wild it swings, or does it swing even wilder, quote unquote? Because the price action is what's going to get you your money.
And the reason I chose the SDS was because it's with XPS and the volatility moves. There's a lot of volatility. So that's
Yep,
the reason why I
SDS
chose
is
SDS. Mm-hmm.
Yep. SDS is the short, triple short, or ultra short of SPX. SDS is the ultra short of SPX. So we're watching the same stop when you do that. We're watching something we're used to watching, which is the SPX, but we're just watching it on a smaller scale. All righty. Do we have any on-demand questions? Any SDS straddle questions?
Thank you, Arlissa.
You're very, very welcome. All these things are worth looking at because everybody needs different things that fit their life and fit their system. Some folks can handle the roller coaster ride of SPX on a regular basis, but sometimes your life doesn't lend itself to that. Like, for example, Saida and I were on spring break this week. So even though I was on spring break, I had a to-do list that I was working, and I did so little trading because I was focused on trying to get my to-do list done, thinking I was under a time crunch for my to-do list I wanted to get done. But some people have the time in their life to trade the day and spend the energy on that. Some people don't have that. So you would rather do covered calls or cash secure puts, or maybe a straddle where you don't have to watch it all day long or whatever. So we got different tools to use in our tool bag that you pull them out when you need that particular tool. If your system needs a break, you step back and do covered calls. You just ride out for the week, or you enter SPX on Monday with the Friday expiration. That's going to be a little less stress on your nervous system too. Yeah, Saida said me too. I had a long to-do list, and Saida said she wasn't really trading because I was working, and she was too, working a to-do list. All righty. So let's wrap up. On demand is a useful tool for practicing any strategy you'd like to try. I was telling Sandra before, I was like, go ahead and just do it on demand. She was like, I don't do all that stuff, working it in my sim. So I want us to have a time where we could show on demand and back test the straddles at the same time, right? So straddles can also be useful at specific times. Anytime there's going to be volatility, they're really used like earnings. People use them for earnings a lot. They're used, again, FOMC days, and just the way that SPX moves on a daily and weekly basis. Again, it looks like it may be quite useful tool just for working with inside of SDS on a weekly basis. Give it a try in your sim, practice first before you just jump out there. Don't be wild like Arlissa and just go live right off rip. I'm just going live. Don't do that. And Arlissa doesn't do that anymore either. You lose enough times with the I'm just going live. You get your sensibilities about you and say, look, this don't really make no sense. That's why you got a paper trading account. What are you doing? Y'all see how I'm just being transparent? This is just who I am. It's just who I am. Is there a site where you can buy at a lesser cost, or any site has all types of amount to buy? That's okay. So if you're buying strategy, the cost of these option trades, they cost what they cost. Yeah, so you can look at Robinhood. It's going to cost about the same thing. The premiums, those things are set by the options people, and it costs what it costs no matter what broker you're using, right? So that's why I say, Yvette, that we use our paper trading account that you trade in your practice area, so that way you're practicing before you're putting your live money on the line. You're getting your bearings about you beforehand. Real quick, I just wanted to come on. This is Arlissa, Educator to Trader. Wanted to come on and tell you and ask you, I guess, to like and subscribe to the channel. If you like the content that I create and I'm posting regularly, then go ahead and subscribe. That way you won't miss anything, and you can be a part
of all that we're doing here. I'm a coach to sellers. I'm an option sellers coach. If that's a vein that you don't know anything about or you want to know more about, then go ahead, subscribe, and check us out all the time. All right. Thank y'all. I appreciate it.